I am going to share my number 5 favorite dividend stock today. This is my 5th favorite stock that I own in my personal portfolio. I've already shared stocks 1 through 4. And just to give some background, my favorite stock number 1 is Johnson & Johnson. Favorite stock number 2 is PepsiCo. Favorite stock number 3 is McDonald's. And favorite stock number 4 is United Technologies. I will link in the description below to the videos I have done on all of those stocks. So thinking about my number 5 favorite dividend stock, I own 38, by the way, 38 dividend stocks. They all pay dividends. Market's way down, by the way. The market is down today, was down yesterday. I could care less because I don't invest for capital appreciation. In fact, I'm happy the market is down because I invest for dividends. And the more the market goes down, the higher my starting yields, the more yield I can get on my capital deployed. Anyways, I have been struggling with this video. I have been thinking about it for months. I knew number 5 had to be a consumer packaged goods company, consumer non-cyclical. It had to be a big one. I basically own all of them in my portfolio. I love all of them. So I just had such a hard time choosing. Which one should it be? Which one? And so anyways, what I did is I created this matrix. I tried to put my thoughts down on paper to better understand which one is my favorite stock. And by the way, I've covered a lot of these on my channel before. You guys know I own Procter Gamble. You know I own Kimberly-Clark. You know I own Unilever. You actually probably know that I own Clorox. I did a very brief mention of that in a video a long time ago, but a new one for you all you may not know. I also own Colgate, ticker symbol CL, so I own that one as well. Some of you have been asking. Now you know I own that. So I own all of these, and I want to pick one of them. I want to pick one. Which one is going to be my favorite stock, number 5? I can't pick all of them, and I want my top 5 to be really diversified, really representative. The reason I'm actually doing these videos, quite frankly, is 1, because you guys are asking, but 2, I just need to know in my own mind, look, I got 38 stocks. I want to reassess where I'm at here in 2018. I want to really understand which are the ones that I just can't live without. These are companies I can't live without, so that as I go forward, I really know where I ought to be focusing my capital, my fresh capital, especially when a stock is on sale. I like having 38 stocks. I like having the diversification that it provides. That being said, I also like focus. And so I could totally see at some point in the future that my top 5 or 10 stocks comprise 50% of my portfolio dollar amount, no problem. And so I really need to know in my own mind, what are the top 5? And I'm going to keep going down the list. I'm going to go through all of my top 10 because I need to do this exercise. Anyways, let's jump into the video. This one is going to shock you. It shocked me going into it. It's the one that I thought I would not pick. There are actually 2 out of here that I thought, no way, not going to do it, not going to pick them. It actually ended up being one of those stocks. So let's get started. So before I start the video today, I just want to thank you all. We are over 15,000 subscribers. Now, 15,000 dividend investors strong. If you have subscribed, it really means the world to me. If you have not, please join our community. You are invited. Participate in the comments below. We have some amazing discussion going on. And if you want to thank me for all these videos I'm doing, these take a lot of time. Please subscribe, like, comment. All of that means the world to me. And check me out on Instagram. I'll link in the description below. You can find me on Instagram. I want to connect with you on Instagram, so let's do that. We have a thriving community over there as well. And I'm sharing insights on personal finance and some just insights into my personal life if you are interested in that over on Instagram. Anyways, let's get started. So I created this matrix, and this is real simple. I didn't want to make a huge project out of this, but it was last night, and I'm like, look, I just got to do this video. I've been thinking about it. It's not only about doing the video, it's about I got to figure this out. And so the problem with this industry, with these types of stocks, is quite frankly, these days, none of them are doing that well. They're all under pressure. Revenue is under pressure. Stock prices are under pressure. You guys know I've been loading up on Procter Gamble, Kimberly-Clark in 2018. I've been buying some Unilever in 2018. You guys know this most likely. periodically if you've been here a while. And I've been buying them because the share prices are down. Companies are in a mode of transition right now. They're trying to figure it out. They're going to get their footing back. They're going to grow again. At least when I say grow, I'm talking about top line revenue growth. But until then, the stocks are on sale. Starting yields are pretty good. So I thought, hey, for 2018, I better go in and up my positions and increase my positions in Procter Gamble, Kimberly-Clark. By the way, all of these stocks in my portfolio, with the exception of Colgate, are large positions of mine, very large positions. These are core positions. Colgate is a medium position for me. It's more in the medium bucket. I don't see myself necessarily changing that, or I guess I just hinted it's not Colgate. Colgate is not the winner. We'll get more to that in a minute. But anyways, I compare against some metrics here, and the first thing I just look at is starting yield. Now, starting yield, is that really going to make or break what's my favorite one? No, because if it's a favorite, even if the starting yield is low right now, I don't care. I will wait till, as a better starting yield, I will wait till a buying opportunity presents itself. That said, I wanted to include the starting yield just because it gives a barometer, it gives kind of a snapshot, a lens, if you will, into what these stocks are about, where they're at, which ones are cheap, which ones are more expensive. So Procter & Gamble 3.48. Earlier this year, starting yields were up in the 4% range. Kimberly-Clark 3.53, same thing there. It's rallied a bit. Maybe with this recent stock market kind of turmoil here, this correction that may be starting, maybe they'll get back to that 4% range. But right now, 348, 353, not horrible starting yields, but I sure liked buying them at 4% range. I'm not really buying them here in the mid threes. I've probably bought some shares in the mid threes in 2018, but I'm tapering off my buy orders now. They've just rallied enough, and I don't see the value at these current prices. Unilever 3.4. I feel okay about that as a starting yield for Unilever, and the reason being, this is in my opinion at least, a bit of a quicker growing, if not, maybe not in terms of current numbers, but what I would say is more potential, more promise, I would say, behind Unilever, in my opinion, than these two, potentially, from a growth standpoint, from a global growth standpoint. And so for that reason, I would say a 3.4 is warranted. It's not a bad starting yield for Unilever. The weird thing about Unilever is there's currency conversions going on there as well, so that affects the dividend yield in US dollars, but over time, all those fluctuations kind of work out. That's where we're at with this one. Clorox is at a 2.57. That's a really low starting yield for Clorox, real low. This stock has rallied quite a bit. I will share more on this stock in the future, but basically I'm up a lot. I started buying this thing way back. I think I started in the low 70s, and then I was averaging in the 60s. This thing is way the heck up from there. I've done real well on this one, but the byproduct of the stock price going up, even though they've been increasing the dividend quite aggressively, it just creates a lower starting yield. So it's just not that compelling from a starting yield perspective right now, at least. Colgate 2.6. Colgate is just a weird company, weird company. I've never really, quite frankly, I know why I own it, but I also don't know why I own it. This is the last one I bought out of the lot. I bought this one kind of later, wanted to have it. I really like the international exposure. We'll get to that in a minute. But I actually don't even think we have any Colgate products in our entire house. And maybe that's because they do a lot of their business, most of their business internationally. But here in the United States, at least, we're not a Colgate family. We don't use Colgate products. Maybe if I go to the dentist and they give me some toothpaste for free, I will use it. But even then, I'm trying to think. My dentist gives me Crest, and we use Crest. And so that is a Procter & Gamble brand. Anyways, their starting yield at Colgate is never good. Never ever been good, at least as long as I've been following the stock. Yet I bought it because I wanted exposure to it. It's probably unnecessary diversification in my portfolio. I like that it's got that international component. We'll talk about more of this as we go, but that's where I'm at with Colgate. It's kind of an afterthought, quite frankly, out of my 38 stocks. It's a good afterthought to have. This is a world-class brand, beautiful company, great company. I know a lot of people probably have this as a core position, so and a prized position within the portfolio. So I'd love to hear in the comments below, what do you think about Colgate? But this one's been on my mind. Should I just sell the thing, redeploy the money into something that has a higher starting yield, or at least more promise of growth? They've been struggling as of late, yet the starting yield never seems to reflect that. Anyways, let's go on. I look at the dividend per quarter. I look at it in 2018 versus 13. I just pulled this from NASDAQ. I use these numbers to back into the 5-year dividend growth rate. I invest for dividends. I want to live off of dividends. I want to use dividends to pay my bills. Hopefully I'll be able to start using some of my dividends pretty soon to start paying bills. Although at this point in my life, I also enjoy the fact that I have a full-time job and therefore I don't need the dividends yet. And the beauty of that is I'm reinvesting my dividends. It's compounding the snowball quicker, so I have even more cash flow. But for me, it's really all about the dividend. Dividend is everything for me. And so I have to look at the dividend growth. And the reason I wanted to really look at dividend growth for this industry is this industry has just been under a lot of pressure. It's not been doing well. This industry has not been doing well. If you've been following some of my videos from a while ago, I did this series on Kimberly-Clark. I never quite finished the series, quite frankly, but I'll link to it below. I'll link to the playlist at least, where I've got like 3 videos on Kimberly-Clark alone. This one, they've been struggling. Anyways, because the industry is struggling, I just wanted to take a snapshot. Are they still providing any kind of dividend growth? Because look, out of my 38 stocks, not all of them grow the dividends. Some of them, they've kind of stagnant dividends, but I'm okay with that. And they're very corner cases. Most of the companies I invest because they increase the dividend over time. And it's important because I get a lot of questions. Ian, I want to retire tomorrow. I'm going to need to invest X million dollars in the stock market to have enough cash flow, but I don't have all these millions of dollars. What do I do? I get these kind of questions all the time. And the fact of the matter is, if one is going to retire tomorrow, it's true, you'll probably need some very hefty sum of money to invest in the market. But if one's looking further out, like myself, or even a phased approach, like, hey, let's do partial retirement. Let's still keep a part-time job or partial earned income, partial passive income, kind of ease into it, have that flexibility. If one's got time on their sides, though, it doesn't really matter as much what the capital deployed. What more matters is the time in the stock market and the growth of the dividend. And so the dividend growth, quite frankly, is how one gets past. This plus reinvesting dividends is how one gets past this requirement of investing all this huge lump sum of money. And so I know this industry is under pressure. I like the industry. I think it's going to make a comeback. And I want to know within this industry just what's happening with dividend growth. So this is real important to me. Procter Gamble, they only grew the dividend by 19% in the last 5 years. That's not very good. Kimberly-Clark, 23. That's not very good, but getting better. Unilever, 27. This is, and Unilever, again, it's a little wacky because I looked at the US dollar conversion dividends over time. And so currency fluctuations, if you looked at it in their native currency, for example, it might be a different amount. But this is as portrayed in US dollars, up 27%. This is why I was saying Unilever, I see a little more promise there. I just feel it. I see it. Maybe I'm wrong, but some of the numbers at least point to it. Others, quite frankly, don't. But I buy into their story. Anyways, Clorox up 35%. So they had the best growth rate of the bunch. I like that. I really like that about Clorox. Colgate, 24%. So you really get Procter Gamble, Kimberly-Clark, Colgate. They're all kind of in the same bucket. Unilever, a little better. Clorox, the best. I like that about Clorox. I'll tell you though, let's look at market cap. $203 billion for Procter & Gamble, the biggest company out of all of these. Quite frankly, for my number 5 stock, I don't want to pick the biggest one. And the reason I don't want to pick the biggest one is, look, J&J, Pepsi, McDonald's, United Tech. These are all real big companies. I kind of look at my top 5 as if I was forced to sell everything, I'd be happy just holding these 5. And I don't want to have them all mega caps. I want to have something a little smaller in there. So the being $203 billion, I almost look at that, for me at least, because again, this is my journey, my portfolio. It may not fit, it may not be fitting for anyone other than myself, but I want to share my journey here. For me at least, I don't like that in this context, that is. Kimberly-Clark, $39 billion. I love that. Good sized company. Not so small that they're an easy takeout target, but not so big that it prohibits growth. I like that. 39 billion, there can be some growth there. Unilever, 139 billion, second biggest company of the bunch, getting pretty big. I don't know if I like that. Clorox, 19 billion. To me, that's a little small. It's a little on the smaller side. I remember when Clorox was like 10 billion. Boy, I owned it at this time. Like I said, I've done real well on this company. They've just executed, and I think it's because they have such great products. We'll get to that later, but they're still small, even though they've had such traction. 19 billion isn't so big. They could get bought out like that. And quite frankly, being smaller also could put them under some pressure of just these activist investors coming in. That said, the activists are coming in and messing with the biggest one, with Procter Gamble. So who knows? They can mess with anything. Just a fact of life of a dividend investor. Colgate, 55 billion. That's a good market cap. I would say out of all of these, look, on the 5-year dividend growth rate, the stuff above is just context. I would say Clorox wins, with Unilever second. On the market cap, for me, for my context, I'd say probably Kimberly-Clark and Colgate win. They're kind of a tie there. Okay, international. I love this. You guys know I like businesses that are global. I don't want to be so tied to the United States. I love my country. I'm a patriot. I'm proud to be American. That being said, I don't want a pure focus just on the United States. I'm also a global citizen. I love all of the countries out there. I'm proud of all of the countries out there. And I believe our world is becoming a lot more global, especially, and I see that happening as time goes on. I just like the cushion, the comfort that comes with that diversification. We know all of these ones are global companies. Boy, we know it. So let's see with these consumer packaged goods companies, are any of them tied to the United States? Are any of them more global than others? Let's look. Procter & Gamble, this surprised me. I didn't realize. I pulled this from your annual report. 66% of their revenue comes globally, outside of North America. Awesome. I get a lot of questions all the time. Ian, do you like to invest internationally? Yes, I do, and I can do it. Yeah, I own international companies like Unilever, but you don't even have to do that. I can buy a U.S. company like Procter & Gamble and have 66% of the revenue coming internationally. Love it. That's what's cool about the stock market and about big companies. Kimberly-Clark, 50% international. Not bad, not bad. Unilever, honestly, I couldn't pull it. I was digging through their annual report. It was getting late. I got tired. If you know how much of their sales are coming internationally, please comment below. I kind of give them, though, a thumbs up here on this one, just because they're based internationally out of the Netherlands, and so the fact that they're based internationally, I imagine a lot of their sales are international. I know they do a lot of U.S. too, but I give them the benefit of the doubt here. They're getting a thumbs up. Clorox, they are probably the loser here. They only have 17% of their revenue coming internationally. And I'll tell you, this is one of the reasons off the bat I didn't want to pick Clorox. I don't want to pick Clorox. 17% international, that's weak. Although maybe there's growth opportunity there. Maybe there's growth opportunity. And 19 billion, a little small. Anyways, Colgate. Colgate was a little weird. This number, I put a squiggly mark before it to mean approximately 80%. The way their whole annual report is broken down is it shows international, but then there's another like line item for like pet food, and then I think it was pet food, but it didn't break out pet food by country, so I just exclude that. Basically, it appears that international, they're about 80%, which just blew my mind. I didn't realize. It actually gave me a reason to keep this thing. Before I knew that number, I'm like, wait, Ian, why did I buy this? It was just kind of like an afterthought. I just kind of bought it to have it. But do I really need 1, 2, 3, 4, 5 of the same thing? Yeah, they all have their nuances. I'd say Kimberly-Clark is more of a paper goods company. Clorox more of a cleaning company. Unilever, they got the foods and beauty products, and Procter & Gamble, I'd say a lot of it comes down to like oral health. It comes down to shaving and cleaning the house. So they all do their own thing, but do I really need Colgate when I got Procter & Gamble and I don't even use Colgate toothpaste? I don't know. Anyways, when I saw the 80%, that was like, you know what, Ian, don't mess with it. Just keep the thing. You don't need to add to it. Just reinvest the dividends. Let it be. See where it's at in 50 years. So that's kind of where I ended up with this one. But you already know Colgate. It's not it. It's not number 5. I don't think Colgate makes it into my top 10. No, I'm not. Not only I don't think it. It's not. I'm not putting it in my top 10. Anyways. So here, international, who wins? Colgate wins, Procter Gamble wins, Kimberly-Clark, Unilever, I'd say all those win. What I look at here is not really winners, losers. Clorox loses, loser here. So now I just look at some revenue growth and operating profit growth. I'm just looking at last 3 years. Look, over the long term, I know the revenue growth for these companies has been great. Why? Because I look at a long-term stock chart and they're all through the roof. However, I know they're under pressure. It's easy for me to pull the last 3 years because it's really easy to grab from the annual reports. And anyways, I just start pulling the numbers. Some of them I don't think I could get in the annual reports, so I just pulled online. Hopefully I got the right numbers. I was doing this quick. I think they're right. They're representative. What you'll see here is revenue is just not growing quickly. And I like looking at 3 year because this is a time when they're facing challenges. Who's doing well during these challenges? 2% growth Procter Gamble, -2 for Kimberly-Clark, 1% Unilever, 6% Clorox, 4% for Colgate. Clearly here, Clorox is the winner. Clearly, in an environment when everyone is struggling and they're going revenue at 6%, not bad. Now, mind you, this is 6% over 3 years, but still, for a company of this scale, selling these type of products in this kind of market where everyone is struggling, hey, they're the winner of the bunch. I wouldn't call that stellar by any means, but they're a green spot on a sea of red, I guess. And so I liked that. I liked seeing that. And then operating profit, I did the same thing. This one was wacky because there's so much it can kind of mess with operating profit. Thankfully, operating profit is pre-tax, but the way companies report it, it's all over the place. Anyways, Procter & Gamble's up 2%. Kimberly-Clark's up 105. I don't place a lot of weight on that. There's probably something wacky happening in the accounting. Unilever up 18. That was good. I liked Unilever. And Clorox up 7. 29% at Colgate, although they had some weird thing with their accounting in Venezuela that changed it. So they even acknowledged that is abnormal. And when I added in, when I factored back in the Venezuela stuff, their operating profit actually didn't have anywhere near this growth. It was a big charge. Anyways, on revenue, Clorox wins. I'd say on operating profit is real hard to say, but out of what I'm seeing here, maybe Unilever. And this again is one of the reasons I kind of have some positive vibes on Unilever. I've been adding it to this year. If you saw my video on my celebration of 10,000 visitors, I'll link, or 10,000 subscribers, I'll link in the description below. I revealed in that video that I own Unilever and I talk about it a bit. You may want to check that out. But I really like Unilever. It's a good company. And so anyways, I look at all of this. I'm having a hard time making a decision. These ones, it was like a no-brainer. It's like, yeah, that's it. Maybe with United Technology, I had to think for a second. But more or less top 4, I knew it. Number 5, I didn't. Going into this, I'll tell you, what did I want to pick? I wanted to pick Kimberly-Clark or Unilever. Which ones did I absolutely not want to pick? Clorox or Colgate. And which one was I like, oh, maybe I'll pick it, but it just seems too easy. Not, too slow growing was Procter & Gamble. So that was like, yeah, maybe I'll pick it, but probably not. What's funny is after doing all of this, I picked one of the ones that I thought I wouldn't pick. I picked Clorox. And so I just couldn't believe it, but I picked Clorox. And so why did I do that? I picked Clorox ultimately because they got the dividend growth. They got a smaller market cap. It's a little smaller than I wanted, but hey, I wanted a smaller market cap in my top 5. They got the revenue growth, operating profit growth. They're growing this business. I'm going to get more into this in a minute. In fact, I'm going to do a part 2 of this video. I'm going to do a deep dive into Clorox in my next video, but I'm going to start with it in this video as well. The things that bother me about Clorox is I can't really buy it now. I'm reinvesting my dividends, but look, I'm not buying it. I'm not buying this thing at a 2.57% starting yield. Sorry. If it gets up to 3 or like a 2.99, yeah, I'll start averaging in a little bit. I'd love to bring it up bigger. It's thankfully it's already at a pretty big size, but I'd like to see it bigger. Why? Because more or less the amount of money I have in Clorox is the same as I have in all of these. Procter Gamble, Kimberly-Clark, Unilever, Clorox. Same amount in each of them. But after doing this analysis, I like Clorox as my number 5. That should have more in it. Like I said, Colgate, half the size, and I'm fine with that. Fine with that. So the thing I didn't like about Clorox, obviously, was the international exposure at 17%. That's not very good. But what I ended up rationalizing, again, this is my personal journey, my personal top 5. I got enough international exposure with J&J, Pepsi, McDonald's, United Tech. I got enough. And so if this one doesn't have it, so be it. Maybe it's an opportunity for growth for them. Look, at least they have 17%. At least they're trying. Hopefully it will grow over time. So why else did I pick these guys? In this analysis, I was looking at all the annual reports. I was just looking like what products do they make and which products do we use? I like to buy companies that make products we use. Look, I just did a video on Smuckers, and look, I own a few of these food companies. They're all struggling. The reason that I own the ones that I do as opposed to Smuckers is I just don't use Smuckers brand. We don't use it. These analyses, they're so close, and I just as easy could have bought Smuckers versus something else, but I just don't use it. So I started looking also, like, out of these companies, which ones do I really support? Which one do I have that emotional attachment to? Because we use the products, because I know if I'm going to buy and hold forever, there's going to be ups and downs. There's going to be hard times. Maybe we're at the beginning of a hard time right now because the market is dropping. I hope it drops more. I hope it tanks. Anyways, I got to have that emotional attachment, so I stick with them for the long term. I was just amazed at what I found in Clorox's annual report. So let me start with that. Let me just start with that. Vitamins. Bam. I love these vitamins. So my wife found these. Since I've been taking these vitamins, I quite frankly have not gotten sick. I've been taking these a while. I want to cross my fingers here. Hope I don't jinx myself. But I have not gotten sick. I credit these vitamins. I really do. I really credit these vitamins with changing my life. And it all started with this. My wife takes them. It's called Rainbow Light. And basically, these vitamins, Rainbow Light brand, she really liked it. So she did some research because I told her, like, look, I really need a multivitamin. I need to get on the bandwagon. I need a vitamin. I used to be getting sick too much. And so she found these ones for me, the Men's Energy Multivitamin Gummy. The reason I like these is sometimes I have trouble like swallowing capsules and vitamins and stuff. I feel like it gets stuck in my throat. I don't like it. Anyways, these ones, they come in these little packs like this, and they're the gummies. And what was crazy is she just bought these online, and you start looking in Clorox's annual report. And what is so cool in their annual report is they own it. This is Clorox, baby. And so I had no idea. She bought these online. And what you also notice in their annual report is their e-commerce sales are through the roof. They're growing fast. And so we, our family, we are part of that. We are part of that. I am so excited about this. I love this. And this is one of the first things I noticed in their annual report. Couldn't believe it. We had no idea. We didn't know Rainbow Light came from Clorox. What? The company that makes cleaning products that we also love. And so you know this is thug life here, and it just wouldn't be thug life if I ever was at risk of losing my Men's Energy. And so I got Men's Energy here, but you know what? I got backups. We got backups here. So this is what I'm talking about. Stacking up on the Men's Energy, supporting Clorox. Love this. 3 of them. And so I love this product so much. I never want to run out. And so we order them online. We have enough in stock. I am never going to be running out of this Men's Energy. So that is what the Thug Life is about. That is what Clorox is all about. I love you guys, Clorox. And so what else do these guys make? What else do they do? They got the Clorox Stain Remover. This is really good, by the way. Clorox Stain Remover. Got home from our Hawaii vacation. Had a stain on my Lululemon pants. These pants are expensive. You guys know I love Lululemon. Don't invest in it though, no dividend. Anyways, put the stain remover on it. before washing it on the spot, came right out. Works amazing. Love you, Clorox. And so also the wipes. How do you keep your house virus free, bacteria free, kills the cold and flu viruses? All right, Clorox. This is keeping families healthy and safe during the winter time. Love you, Clorox. Always have to have the wipes on hand. We don't use a lot of bleach, but we got some bleach here. Clorox, that's probably what they're best known for. That's kind of the iconic brand that they have, and I love iconic brands. But you know, sometimes you need some bleach, and so who do you go to for bleach? You're not going to go anywhere but Clorox. What else do these guys do? Look. All the parents out there, all the parents. Many of you know I have 2 young children, a son and a daughter. And sometimes, unfortunately, when you have little kids who use diapers, a diaper rash can occur. Well, with Clorox, they own the Burt's Bees line of products. This is called Burt's Bees Diaper Rash Ointment, Burt's Bees Baby. And so we love Burt's Bees. Actually, there's a lot of Burt's Bees products that we use. This is just one of them. Clorox, if you didn't know, you may think, a lot of people think about Clorox. They're like, oh, they just make this. That's so boring. Seems like a commodity. It seems like, oh, they just make their bleach. No, they make the wipes, they make the detergent, the stain stuff, they own Burt's Bees, they own the vitamin company, they own a bunch more stuff. In video number 2, I'm going to share more, but check this out. I just picked this up from my wife's sink. This is Burt's Bees Cucumber and Sage Facial Cleansing Towelettes. So they make these kind of products for women, facial cleansing towelettes, removes dirt, oil, and makeup. And so this is just great. Burt's Bees, we love you, Burt's Bees. And so anyways, you know, this is probably what's nearest and dearest to my heart, because I'm telling you, this literally changed my life. I got the energy. I don't get sick. I don't know what you're doing, Rainbow Light, but you guys are doing something right. So at the end of the day, though, this is what it comes down to. Really hard for me to pick my number 5 favorite stock of all time, but it's Clorox. This is my number 5 favorite stock of all time because of the factors I discussed, because I really love the brands and support the brands. I've owned this one a long time, so I probably should have made this decision easier, but I'll tell you why it was hard to make this decision for me is it's gone up so much. And sometimes when you're a long-term investor and something's gone up a lot, you don't want to add more because you're like, man, I bought at a fraction of the current price and now should I add more, especially if the starting yield is so low? Look, I'm probably not going to buy more Clorox now except for reinvesting the dividends until it goes down a bit. And I hope it goes down because the market's starting to correct. Hopefully that continues. May it. It will help anyone and everyone in the dividend community who cares about dividends, does not care about capital appreciation, at least in the short run. Long-term capital appreciation is good because it's the signal of a well-managed company like Clorox. But anyways, I kind of was like, I don't want to buy it. I don't want to buy it. Starting yield's low, gone up too much. Hopefully I get to the point where I can buy some more because now that I've done this exercise here, finally I feel good about picking out of the 38 stocks I own, my number 5. Now you guys know my top 5 favorite stocks. If I couldn't own any others, I'd be so happy just owning these 5. I'd put it all in these 5, no problem. But I like having more, and I like having that diversification, and so I'm happy with that too. And I will do 6 through 10 over time. I look forward to that. I'm real excited about that. But first, in the next video, I'm going to go through a lot more insights on Clorox. I want to get into all the financial metrics. I want to get into the balance sheet. I want to get into the income statement. I want to get into their annual report. I want to show you all firsthand how I like to analyze companies, how I look at companies. I want to refamiliarize myself with this company because I'm looking forward to buying more. I'm looking forward to making sure it's not the same size and dollar amount as the other ones. It needs to be bigger. It's my number 5. Anyways, thank you for watching. If you enjoyed the video, I invite you to please subscribe, to comment. All that means the world to me. If you've been hanging in here, by the way, we're going to be doing a meetup in San Francisco coming up, PPC Ian Meetup. All the locals here in the greater Bay Area, California area. I know some people might even be coming as far as Sacramento. And we're going to meet in the city in San Francisco. I am going to link in the description below to a link on my website on ppcian.com, a page on my website where you can sign up for a very specific email list, and that email list is going to be the local people. It's going to be us locals, and you will get more information there on the email list of the various days and times that I'm proposing, and I'd like people to respond to that to find the one that works the best for the most people, and then we will do it. And so as of this time, I'm thinking we do it in the month of November. I want to give people a little bit of time. It's going to be early November when we do this, and it's going to be fun. We're going to talk about stocks. We're going to meet each other. We're going to put faces to the names. It's so cool. I'm actually having lunch next week with a subscriber who I just met. I was randomly walking around town. He came up to me. I'm so thankful, so blessed, having a lunch with him next week. And so I want to do more of that. It's just fun. This is a community here. And so check out the description below. We will be doing that meetup. If you are local in the greater Bay Area, California area, you can make it to San Francisco in early November. Let's please sign up for the list. Let's make this happen. It's going to be so much fun. And so thank you for watching. Before I leave today, in terms of a full disclosure, I own the stocks mentioned today. I am long. I own Johnson & Johnson, ticker symbol J&J, PepsiCo, ticker symbol PEP, McDonald's, ticker symbol MCD, United Technologies, ticker symbol UTX, and Unilever, ticker symbol UL, Clorox, ticker symbol CLX, and Colgate, ticker symbol CL. I own all of those stocks in my personal stock portfolio. For all you hip-hop fans out there, you know it. You know I like this stuff. I've done some of the Tupac references. Who out there listens to Pete Rock and CL Smooth? That's what I was just thinking about. CL Smooth. Man, so underrated, so underrated. Some of the best rap music of all time. Comment below if you're feeling that vibe, if you like the Pete Rock and CL Smooth the way I do. Man, CL. Anyways, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. I'm literally just sharing my personal experience here on YouTube, just for fun and entertainment, just sharing my journey. Hey everyone, thanks for hanging in there. Thanks for the support. I love you guys. I will see you in the next video.